How to make money during a recession. This is Stockerfinance. I'm your host, David Scheuer. So first off, here's a little summary of a recession. So a recession is defined as 2 consecutive quarterly drops in GDP, a decline in trade and industrial activity. They're generally unpredictable, although some have proved otherwise, like Michael Burry. Leads to higher rates of suicides, divorce, job loss, and other bad things, etc. However, it does open up opportunities for many. So first up, and our first opportunity that you could make here and your approach to actually benefiting from this recession is a safer approach called the Warren Buffett approach. So Warren Buffett and his partner Charlie Munger have stated that they don't try and predict the market. They simply make investments they're confident in and then hold for long periods of time. So holding means that you don't have to worry about recession since you're holding through them anyways. And the best part about this, if you're holding, you generally want to choose dividend stocks that will pay nice dividends during a recession, or stocks that are generally recession resistant, like food, staple goods, etc. While others panic and sell, you can stay comfortable and focus on buying companies with your dividends at their discount prices. So, take advantage of low interest rates. And this is the second one here that's also a safer way to make money. So, remember, markets are dictated by simple supply and demand. And banks need to lend you money to make money on their money. So when the economy is down, the opposite tends to happen. Interest rates will actually go down. Now that's from the Bigger Pockets podcast, a quote I took from them. So thanks for that. And basically, interest rates will tend to go down because banks still need to give out loans. They still need to make money on the money that they're giving out. And generally, when there's a recession, not many people want to go to the bank and take out a loan. So what happens is they actually lower interest rates in order to encourage people to go to the banks and start taking out loans, etc. And that means it's a great opportunity for those who have extra cash on hand and can use that money to buy a house. And we'll talk more about this later. So number 3, defaults. During a recession, many people lose homes, and this really applies to the 2008 financial crisis. So in 2008, many people defaulted on their home loans and were forced to foreclose. Because of this, the banks wanted to get that home off their hands as quickly as possible, which means they lowered the price of the home. This creates the perfect opportunity for investors. And if you use number 2 as well, you can take advantage of the lower interest rates and the defaults, and you're getting a home and a property at a super cheap price, as well with a perfect or just a super low interest rate as well. And it's just a great deal. And that's how a lot of people in real estate made money during 2008. So now let's talk about the Big Short. And from here on out, we're going to get into some more riskier type of ways to make money from recessions and downturns in the market. So the Big Short. Everyone wants to be Michael Burry. And if you don't know who that is, he's the guy who predicted the 2008 financial crisis, made a ton of money. If you've seen the motion picture, The Big Short, he's like the main character. He's kind of weird. So everyone wants to be him and to predict the next big crash. Everyone's trying to predict it. However, it's incredibly hard to predict a recession. And although he made a ton of money doing it, Michael Burry still took a massive risk that led to many of his investors leaving him afterwards. If you do believe the market is going to crash, then placing a short sell on indexes or stocks is something you can do. Just understand that shorting can lead to infinite losses since a stock can go infinitely upward. I don't recommend this strategy. However, if you are extremely confident or already confident on a security declining in price, even without a recession coming, then you may want to try to benefit from this strategy. Now let's talk about going long on U.S. Treasury bonds. This is probably a more unique way to make money. So U.S. Treasury bonds are generally a safe investment since they're backed by the U.S. federal government. Investors will shelter their money during a crisis in Treasury bonds, which results in the price of Treasury bonds actually increasing. So it pays a nice 2.24% dividend. There's a 7-year bond and a 20-plus year Treasury bonds. So the TLT is the one I'll be talking about here, which is the 20-plus year. And it'll give you more upside and volatility, given the longer duration bonds are more sensitive to the interest rate changes. So if you look at this graph here, and this is the TLT, I guess we could just say stock here, bond price, but it basically, from 2007, which is basically the very beginning of the financial crisis, to about 2008, which was the peak of the financial crisis, you can tell it actually went up 40%. So you would have made 40% on your money while other people are losing 40% or more on their money. So yeah, that's pretty crazy there. And as you can tell throughout the years here, it's steadily increased and has a nice dividend. So even if, you want to move your money somewhere and it doesn't necessarily, spike up right away, there's not a recession in the next year or whatever, or 2 years, you're still going to be okay. You're still going to be receiving a nice dividend And, as you can tell, it increases over time. So, hard assets, gold, silver, etc. Instead of buying a chunk of gold and literally, just going out getting a raw chunk of gold from some supplier or whatever, consider the GLD ETF. It makes active investing much easier and will be simpler to buy/sell than buying physical gold. So hard assets become way more valuable during drastic economic situations, and gold does not pay dividends or provide earnings, but it did perform incredibly well during the 2008 financial crisis, and we'll see that in this graph here. So this is from the very beginning to the low in 2008, and it was up 40%, so even more than the TLT. And if we look at this graph here, over the course of pretty much the entire to sort of the beginning of or when it started to recover, we were at 148%. So you would have actually more than doubled your money by holding GLD here, which is pretty incredible during a recession. So you can definitely take advantage of it. However, the benefit of TLT versus GLD is that TLT pays a dividend, and so you're not going to be receiving that dividend when you're investing in this gold ETF. All right, so number 7 is simply a high-yield savings account. So this is actually an extremely safe way as well. And although it won't give a large return, 2% a year guaranteed, maybe a little less, might be like 1.8, 1.7% a year. But that guaranteed return is very good during a recession. And the benefit of this is that it allows you to save your capital for buying opportunities. So the market will always recover. So if you're just saving your money on 2% interest and then using that capital plus whatever interest you earned to go and purchase stocks, real estate, get those, low interest rates, buy those foreclosed homes, etc. at discount prices, this is an excellent strategy, and it's a very safe strategy as well. So to basically just make a quick summary of what we talked about here, any investment that gives you a source of passive income is great during a recession. Even if your investment drops, you'll still receive that passive income, and hopefully your investment will recover after the recession, and that way you're just making a return on your money during the recession, even though the price was dropping. So purchase utility service and stocks. I kind of touched on this a little bit, but I made a different video about what stocks specifically to buy, so that's why I didn't really touch too much on that in this video. But you want to buy one that are recession resistant, so food stocks, services, etc. Hard assets perform well, so gold, silver, etc. As you can tell, the gold ETF performed extremely well. Save capital to purchase assets at discount prices. So obviously everyone's trying to make the biggest return they can, and buying stocks at discount prices will allow you to do that. So don't try and predict the market unless you're Michael Burry and you're a mathematical genius and you somehow figure out the subprime mortgage crisis. All right. Anyways, thanks for watching. Make sure to subscribe. I'm going to have new videos coming out soon. I hope you had happy holidays and everything. And I'll see you guys probably in the new year, or maybe I'll upload a video before then as well. Anyways, peace out.